Yo, 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 yo. It's your boy Professor Pippins back at it again, coming at you live with a compare and contrast video. um, Going back over how last weekend's chart analysis played out to potentially catch some trades. The second quarter has been pretty tough for your boy. Yeah. Um, I had a few. I last week I didn't trade GJ as much just because I see that it's just pushing bullish and continue to push bullish. So I don't want to be the one potentially getting caught in these pullback trades. Trying to wait for the market to pull back and then potentially catch a buy. It's been a little bit difficult to try to figure out where prices gonna come back to as far as the retracement and then get back active. I did have a little scalp short from over here, trying to catch back a 50% retest trade, but as soon as it pushed away from my entry, do that thing and break even. As you can see, it pushed down probably, let me see, we enter from over here. Yeah, it pushed about 20 pips, stops and break even. Didn't take anything off this trade because I just wanted to see how far it would run, see how far that retracement would come back, and it went 20 pips and then pulled all the way back and got stopped out of break even. So we're gonna start off with the DXY like we always do. And what I want to do is kind of just show some ways we potentially could have captured some trades. Um, Looking at some of these market analysis and yeah, just go from there. But for the most part, starting off with the DXY, brought to you by DXY. Yeah, based off the last weekend analysis, the weekly was bullish, the daily was bullish, and the 4 hour what we had was consolidating. So for the most part, price action way back over here. All this is bullish, higher highs and higher lows. As we looked at the 4 hour, we saw a bump over to it. As we looked at last week's price action, we saw like a 4 hour consolidation zone, which is right up in here. You can pretty much get rid of this. Go back out to the 1 hour. So this was the 4 hour consolidation zone we were identifying here. And then you have the weekly open on April 10th. And as we can see, price action gapped down. And then, price action came back up or bought back up, creating some type of little, delete this here, that really, it kind of played out for the most part. It didn't come all the way back down to the structure that was most recently broken, but you got the one bottom here, the second bottom, and then it got up out of there. So we can delete that for the most part. But what we can see is as price action gapped down, it created a little resistance down here at 99.630, 625 level. Fill that in real quick so we kind of can have something for your eyes to see. So we created this small, this level of resistance or support right here. Price action pulled away from that zone, came back and respected that support. So at this point, when I'm looking at this in hindsight, what I'm seeing is liquidity being built right here as price gapped open. We had people buying from down here. And then we had people buying again from down here, which is right on top of the consolidation zone from, we would say, 2 weeks ago now. And then as you can see, as price action pulled away from that level, it actually came back and grabbed that liquidity before making a new higher high. So with the way this is marked up, potentially we could have, I don't necessarily know that we would have been looking for buys right up in this zone simply because we had a high from 2 weeks ago. That price action, once it pulled away from this support here, it never did push up and break that high until it got back right here. And then once it did, well, that's pretty much a candle wick of the high. So I wouldn't necessarily probably even counted that as a break of the high just because it didn't close above. It just wicked through it. Hold on 1 second. All right. So like I was saying, I don't think I would necessarily count this as a close above the previous high simply because it only wicked through and then it sharply impulsed back to the downside. But as what you can see is based off of this little support that was created here earlier within the market, market opening, then right before the London or right before New York. Yeah, right before New York. That support was never broken. And then once you got over here, what you had was the bullish continuation zone. So potentially, if you're watching this, this is 1 o'clock in the afternoon, so I definitely know I wouldn't have been looking to trade. But if you were watching it there, you could potentially have a breakout trade, long position as price action started to break these highs right over here. Couldn't necessarily tell you what you would have been targeting looking left, but we potentially would have had stops below the candle, that broke above um, that resistance. And then based off the way you trade, there's no telling what you could have been targeting, but just this little setup here would have been a 3-to-1 ratio. And basically just taking it as a breakout trade and then probably immediately pulling stops to profit. Based off of the way I trade, I probably would have looked for a break and a retest of this level. So potentially I would have let this run and then let it come back down, and then potentially definitely would have took this trade. Same stops below the candle that broke above the resistance. And then I would now actually definitely have a target simply because I saw this push up to that high. So I would have been looking to target to there. 3.89 risk to reward. And as you can see, that break and retest of the bullish continuation zone would have played out. After that, yeah, you just, pretty much you have now got potentially one breakout trade that could hit some profits depending on what you're targeting, depending on your ratio. And then definitely this target, this trade would have definitely played out as the targets are now set when we have price break above this resistance, come up and then pull back and then retest those highs. Going into the rest of the week, depending on if you identified this support that was created down here, price action is downtrending here. This is on the 13th. What day was the 13th last week? The 13th was Wednesday. So as we started downtrending here, going into the 14th, going into the New York session, potentially as price action started to break above, I don't know. I probably would have waited till the structure shift, because this is a pretty nice little bearish downtrend here all day Wednesday. And the way I would have had this marked up was the continuation sell zone or break and retest trade. So potentially as price pulled down and then came back and respected that level, probably would have been looking at short. But if this level of support right here was identified, then definitely would have not been looking at short, because you selling right into support. So potentially as you continue to watch the charts going into the New York session, what I would have been looking for buys is the break of the last lower high that pushed you into the lows. Looking for buys simply because higher time frames are bullish. And what you have is the break. Then you got this low candle here would have been your retest potential entry there. And then target yet again would have been probably the highs or the new higher highs. So we'll go for guaranteed targets, which would have been the previous highs that would have been set. And then you could have had stops right below that resistance that was created. And once you go down to the smaller time frames, you can see that even better as far as the break and the retest. So you got the last lower high here, price action broke, retested that lower high, and then pushed up out of there, and then potential targets over there. So on the DXY, potentially 3 trades from last week that could have definitely played out for you. 2 guaranteed would have hit, and then possibly 1 break even. Okay, switching over to UJ. Let's see what we could have had. All right, so reading last week's analysis, the weekly was bullish, the daily was bullish, the 4 hours bullish, the 1 hour we waiting to see the break of the 4 hour support or resistance before getting active. And what we got was the resistance broke first. So potentially we still are looking for buys. Price action broke above the bullish continuation zone. So if you want to take the early trade, you got the break and the retest there. So that could have been trade number 1. Like I said, the same thing with the DXY, depending on how you trade, depending on what your targets were. This probably would have ended in a break even for you, just because there's no guaranteed location of where you want to set your targets at. But as far as stops, candle that broke through the zone would have been the stops for the most part. And then, you could have potentially, let's see how far this went. It's pushed up 50 pips. So potentially, if, you say if you go based off of a pip target, then you could have captured, closed out, took partials, whatever. But as price pushed on throughout the week, looks like Monday at 8 o'clock, so Monday Asian session, you could have had price action retesting the continuation zone. If you're sitting there watching, targets now definitely based just like DXY, you got definite targets now you can aim for. If you'd have got in, you've been sitting and waiting, and then stops below the candle that broke through the structure. So you're looking at a 14 pip stop loss, 58 pips target. And as you can see, these setups play out daily, where you potentially could get active, depending on how you mark up your charts, depending on how you analyze. So this was the break of structure on Sunday, pushed up and gave us a target, came back down and retest the bullish continuation zone. And that's how we identify our targets, looking left for the most part. So that could have been your break-even trade, first winning trade, pushing back over to the hourly as the week and price action continue. Price came back down and broke through the bullish continuation zone, but immediately got right back out of it. From the weekend analysis, we know price action was bullish, so we definitely was just sitting and waiting for the buys. What I can see here is price action came and grabbed liquidity from, I guess, everybody who was buying from over here, stopped those people out, and then gave you a new higher high, and it came back to retest. So potentially, if you're sitting and waiting, this is now Thursday London session, sitting here and waiting. And what you got is a little downtrend. So potentially the way I would have took it was after this downtrend would have shifted the structure, then came back and retested, a potential entry there. First targets potentially was, the new higher high that was created on Wednesday. And then even deeper targets would have been the new higher high. So stops would have been below the candle that broke the lower high. And then TP1 could have been 42 pips, and then if you just let it run, could have had an 85 pip target. Hold on one second. And pretty much that probably would have been it for UJ. So same thing as DXY, 3 potential trades, three pretty good setups. If you were looking or waiting for this after this previous impulse, the retracement, that's probably about 70%. It pulled all the way back down. So if you were looking for this trade, you could have definitely caught this one. That could have been a fourth trade for you that could have smacked targets, but based off of how we had the market analyzed last weekend, and then based off of the way price action played out, there's 3 setups, 3 good setups there for you where you potentially got active within the market. Switching over to GJ, like I always say, GJ never will look like the weekend analysis simply because I traded, so it always gets reanalyzed throughout the week. But with the short that I took, I realized we were in a bearish channel. And what I was looking for was after we hit the top of the channel, come back down 50% and then possibly push back bullish. As we can see, that did not happen. Let me get rid of some of this stuff on here so we can see the charts a little bit cleaner. That was my TP1 that did not get hit. I was looking for it to pull back to the middle of that channel before taking off. But that's kind of why I walked away from GJ for these this last week or two, because it ain't really moving like it normally moves. It's just giving these big ass bullish impulses. And if you're not sitting and waiting and ready for the next higher low that it creates, like this really didn't pull back to anything except, push, pull back, push, pull back. And then this pull back to here, but which is the structure that was most recently broken. So I guess you can play it that way, but I haven't really seen too many confluences that's been the same on GJ to say, okay, we're gonna pull back to the structure most recently broken. Okay, because you look at this structure here, this local consolidation zone, we broke above. Ain't no retest, B. What a retest at? Ain't none. So then what you got was, we got a little downtrend. Price action started to pull above. We broke above and broke out of the downtrend. The retest, I guess you can call that a 50% move. Let's find out. Let's see, we take it from the low to the high. 50% field. So yeah, it came back to a 50%. So potentially, if you notice this, why price action was still moving, and this is Tuesday. So during the Asian, we created a high, pulled back a slight bit, and then on through to the London is when it created that new high. The New York session gave you that pullback to the 50% and got on up out of the This is Thursday. This is during the New York session. So this is right around London close. London close gave you a push into the new highs, and then we just consolidated for the rest of the week. I was looking for buys back down to this zone because that's what price action took off from before. Whereas like we saw on UJ gave that big ass 70% retracement. So this setup right here would have definitely been something that could have played out. But on GJ, you ain't really getting that. You getting you for the most part, what I'm seeing is you have to be open to any type of setups for the most part on GJ right now, because it's doing 50% plays, it's doing structure most recently broken plays, it's doing, shit break out when they want to. But the best thing would be to wait for the big session market opens, meaning the London and the New York, and then having your zones and everything marked up, potentially see where you can potentially catch a trade from. Because right here during the London, you got manipulation into the highs, looking left, and then it came back a little bit, and then it tried to push higher. So potentially, if you were looking for during the New York to London session on Tuesday, then potentially you could have caught a quick short from the New York open down into the New York close, 55 pips, not bad. But overall, that's a counter trend trade, because we know from all the rest of the time frames, the higher time frames, price action is big bullish. It's high highs and higher lows. So TJ has been a little frustrating, because I only trade the Asian. So by the time I get to the charts, there is not real big impulsive price action. And then when you get here, you see some type of setups, as far as like this one, when I saw that, we pushed into the top of that channel before, and then we came all the way back down to the bottom. So that's why when I saw this in the Asian session, I was thinking, okay, at least probably pull back to the mid range of that channel and then push back higher. But nah, it just gave you one candle play, 1 hour play within that 4 hour candle that was bearish, and then it got back active to the top side. Pushing over to GU, let's see what we got. Higher time frames. Weekly was bearish. The daily was bearish. FOREX was bearish. In 1 hour, we saw a descending channel. So from the weekly open, the structure most recently broken. We could have had a short setup from here. We were looking for price action to push back into that level to continue the downtrend. So potentially, let's see here, short position. We could have had shorts as price action pushed into that level, stopped right above or even above. You got a high, low, lower high, lower low. You could have had it above this lower high or that lower high. Potentially, since it being the first trade of the week, I probably would like to right above 14 pip stops and then target, the support that we created on the 4 hour level here or over here. So we'll pull this in. And as you can see, if you took the first 4 hour low that it created right here, did we hit? I don't think it hit. If you target way down there, I don't, well, potentially, yeah, if you left it running, that would have came all the way down to about right here. And then you would have had targets hit on Tuesday during the Asian session. So that would have been a pretty long time to been holding that trade. I don't necessarily know that I would have held all that long, simply because I would have just been looking forward to retest the lows. And as it got close to that level, and I saw it start to exhaust or not really have any real momentum pushing into that low, I probably would close as we got real close to those stops or to those targets. But outside of that, we've got the 4 hour support, the 4 hour resistance. From that point on, looked like the bearish momentum has started to exhaust. So couldn't necessarily know that I would have taken anything else looking at GU. Looking to see, I see price manipulated the lows right here, and then you got equal momentum down, equal momentum up. So even though price action is bearish, you potentially could have been sitting to look to see if you could take a buy from down here at this level. I wouldn't necessarily suggest that it would work out 100% for you, because higher time frames are bearish. So if you're willing to take this counter trend trade, you see price push down. You see you got high, low, lower, high, potential lower, low, failure to create, equal lower, high, failure to create new lows, equal lower, high, failure to create new lows, potential new lower, high, liquidated the lows. And we call it, I see it as a liquidation, because price push down, gave you a wick, stopping out these people who were long. stopping out these people who were long, and then just reversing right back in over here. So potentially, if you were sitting there watching this and saw price push down, momentum came back, equal momentum, and then gave you a higher low, potentially could have had that buy back into the highs. But I don't know that I would have been sitting and looking for that or expecting that. So that's pretty much what it is on GU. On AU, oh my gosh, man, I had the meanest entry from right up here. Funky ass broker. I get frustrated with my broker because, you know, I sit and I wait and I set up these analysis, and I had these trades and I put my entries, pretty sometimes pretty spot on. So what happened was, where we at with it? I had a freaking short from right here. I did take this buy as we. Am I deleted my trailing stop? Okay, yeah. So I did take this buy during the agent session. Bought down to the 15-minute is a lot clearer. As we pushed up, I was looking to target the highs right over here. As we pushed up, I saw this candle start to produce. Those are my trailing stops. As you can see, identified over here. It's in blue, so that's what let me know the trailing stop is for the buy. As price started to break the low, right in over here, I got trailed out on this buy. So that one pushed for about, let me see, pushed for 11 pips and got stopped out around 6.5 pips. Delete that. And then on the shorts, what I saw was we pushed up into that level and was not able to break, pulled back down, tried to go again, and then you had this big ass momentum candle coming down here. I think I took this off the 5-minute as price action went to break the next low of the previous candle. Yeah, that's exactly what I did. As price action went to break the low of this candle here, I got in, thinking it was going to continue to go short. And what happened was it pulled all the way back. Because of the lot size I used, I had to cut 50% just in case it was a manipulation of the Asian low to go continue higher. I cut 50% of the trade right here. And then I had stops above this level at, let me see, because I remember it at like 680 on. So I had 680 when I was off the platform I traded off of. I don't trade off of TradingView. And it stopped me out at like 682. And I was like, bro, if, that trade would have held on. Initial targets was all the way back down here because I was wanting to take buys from down here. But, I left it running before I went to sleep. So I moved it up to this little area right here. That target would have got smashed. And then what we were looking at from the beginning all the way down there would have got smashed. Right on top of this box here, where price action took off bullish from. This is what the initial, this is how the initial setup looked. And as you can see, it played all the way out. My broker stopped me out with some fuckery right up here. And like I said, the reason I get upset with it is because if it was an entry, they wouldn't have put me in, by 2 pips. I've seen it several times before. I've dropped several limit orders where I got results of, the broker didn't put me in. I don't understand. You can even see where price crossed my entry and then pulled back and it still didn't put me in. But if it's a stop loss now and you like 5 pips within that stop loss, or your ass is getting taken out of the market. But it's all good. I was more or less happy that I was reading the market correctly over here. And I was definitely happy that I took myself out of the trade right over here with the trailing stops. Because like I said, I was only targeting those highs right over there. I saw the higher time frames with bullets, so I tried to catch a little scalp buys back into the highs. Overall, looking for the shorts. I did take both of those trades. I got stopped out completely on this one and then trailing stops on this one, but I was looking for buys once we got back down here. And I did not take those buys simply because I saw price action pull down. And let me go ahead and delete these entries. What I saw was when I was watching it on Friday, when I came to the charts on Friday, I forgot about the Easter holiday. And I was like, damn, the spread is way too high. I'm not, like the spread for AU was like 50 to 80 pips. So it's like 8 pips. I'm not fucking trading that, bro. 80 pip spread on damn AU. So what I did was drew this little trend line and I had the higher low. And if we was gonna go for a high, we had to get on the bottom of that thing. And then once I saw price action come back down, I started to short it. But like I said, with them spreads that high, I wasn't willing to get in, especially after this over here. I was quite frustrated with that. But if I would have shortened or shorted or I would have put a sell stop once price, broke below here, because I saw that we were failing to create new highs. We were failing to get back out of this zone like I wished it would have. And I would have targeted, the bottom of this wick right down here. So potentially, as we would have entered that sell stop, it would have probably went 7 pips. Ooh, that's weak. No, I wouldn't do that. I wouldn't have took that. But, I saw it setting up. It was one of those, I was thinking that once we broke below here, that we was gonna come down to attack some of these lows. So I know I wouldn't have entered for 7 pips, but I definitely would have entered to hold to come all the way back down here. And that's looking at something, but that's a little bit more what I would like to capture 20-something pips, and then even the extreme all the way down there, 37-something pips. But that would have been a trade that I would have had to hold over the weekend. Depending on the lot size, depending on the risk, I potentially would have. But like I said, the spreads that were on Friday kept me out, so there's nothing really to worry about. But overall, AU, I was reading the market. I was reading the market pretty well on AU. GU is just pushed out too far without seeing proper retracing, without seeing how it's normally moving. Not really willing to risk hopping in without seeing proper retracements, because it just, you don't know where those retests are going to come down to, where they're going to stop at, where they're going to set up for you, potentially get active back to the upside. Yeah, it's going bullish, but where can you possibly get in from to go bullish, But that's pretty much all I got for this one. It's pretty choppy this week. Hopefully next week's price action come in and it's a lot better. For AU, I do think that we are going to bust through this demand zone simply because we have got several taps into this demand zone where price action has reacted, but you had just as much momentum you push into the highs with is the same amount of momentum it came back down, and even broke the lows with the bearish sell order. So, even over here, pushed up higher, did not break this high, came back down and eventually closed below, this low and that low. So I think we're going to smash through this one, and we're going to come back to target right down here, probably about 72, 272 is where potentially next targets for next week it will be, but we'll just have to see. Based off of the news, Sunday, bank holiday, Monday, Swiss franc, GBP, Euro, all bank holidays. So that might that might chop it up a little bit. But coming back into Tuesday, what I'm based off of experience and time previously in the market, when you see all these freaking bank holidays on Friday, Sunday, Monday, there's going to be a huge gap in the market on Tuesday. So be ready for that. Price action way up here, probably going to open way down here somewhere, or right below this little zone right here. It's going to be a huge gap. And one of the things I do know is once price come open with them huge gaps, they do like to fill. Looking at AU from the weekly, we are completely bearish. Well, not completely bearish, but we bearish. We printing bearish candles. I'm saying not completely bearish because this is the impulse of moving to the highs. We could just be retracing here, but overall, right now we're bearish. We liquidated or captured profits with this candle here, and then we just been bearish ever since. So the next real major support is right down between 72,833, and then we could say 71,500, 582. But other than that, it's just going to be just continue to follow what price action is giving you. High, low, lower, high, potential new lower, low. And I think the next area is going to be set to attack is that 71 or 72 to 70, 71 area, 71, 600 area. So that's all I got from this one. I'll be getting ready to do a weekend analysis here shortly to kind of show where I think the market's going to go and how potentially we can get active. Like and subscribe. Thanks for watching. I'm out of that thing. Peace.